Hey everybody, I'm doing another little video here, and this video is just kind of to show you a mistake I'd made today, Thursday, and this is something that I want to go over again because it's obvious when you see things work out in the market. I'm here after the close. It's a little before, a little after 8 o'clock, 8:17. And the markets are going, and the S&P futures are grinding lower here. It's about 650, and I'm watching the futures here move up here, and I see this line here. Now, you know, by watching the show, I put these trend lines in here, and these are important trend lines. They all start with the important pivot areas. Defined pivot, where the market here makes a move higher or lower based on the short-term trend. So a pivot's really going to be a change of direction. So this is like a pivot area here because this short-term trend right here. Oh, let me fix that. I'm sorry. Get another line in here. The short-term trend here now is moving down. And whenever we have that change of trend, even though it's so small, this area becomes a pivot area. So again, here you can see a nice little move down. You have a couple of pivot areas, a smaller trend line, and a smaller pivot there. So these smaller pivots inside the bigger pivots, and this is how we react off of this. So whenever we have a pivot being put in, and the pivot comes, or we're looking at a pivot. A pivot is what's left of the market move. But when we look for these levels and these pivots to start to form, we have a criteria to pay attention to. And one of the criteria is watching this triple stochastic, the oscillator down below. There's 3 time frames here: 14, the 40, and the 60. And this shows great probability when they all line up together. And in this case, even trading at a little after whatever happened, this 7 o'clock or so happened on this. We pushed up here, and we just kind of grinded higher, and we got overextended, and we ran up against a trend line. And this is the important part that I want to kind of discuss today on this. The triple threat is an indicator on its own. You know, when we talk about 5 indicators, or the original methodology really that developed was based off the stochastics, the moving averages, the recognizable trend lines, and recognizable patterns. And patterns are important too. The same patterns, the channels, the wedges, basically. So having a triple setup like that is great. You know, the timing is there, but we still need something else to confirm that and add to that. I always say there should be 3 indicators lining up for HPS. The stochastic, triple stochastic is one. We also want to make sure that 5-minute time frame is on your side, and the 60-minute time frame, you want on your side. The 60 gets a little tricky. It becomes, where that 5-minute you could be going for a scalp, you could be going for a 1-minute scalp just for a couple points. You're not really concerned with the 60 as much as you would on a bigger trade. So today, when I get into some of the calls, it was, when you get into those calls, you're actually looking for a bigger trend to start to really capture the bigger percentage. If it doesn't move, it kind of decays a bit, and it doesn't get any big move, you'll slowly not get anywhere fast. But when you do have these setups, you get these nice moves, and that's where you want to be. So it's just important to understand that this right here, and that's showing this aftermarket, is a sell signal. It's an obvious sell signal. We go back here, and we're going to go back and take a look at this line. You can say, well, John, how does this line show up? Well, there was 2 important pivots here, and I extend those. And we find out that those come into play over and over again. And we hit this here, and the same thing back here. There's a bigger pattern that's playing out. There's some of these lines go back pretty far. This one I'm going to get rid of right here. This is nothing here that we're looking at. I don't know what that one's from. But, this one right here is that retracement trend line underneath this thing. And these work. This is, you break down out of the channel, you push back into the channel, or push underline to the channel line. And, and then we failed. And you can see that happen over and over again. Here's kind of a little example right here out of this wedge pattern breakdown. We pushed up into it and then it rolled over again. So whenever you come up to these trend lines, and you have that triple threat set up, it's a much better HPS zone. You just don't want to have a triple threat. Sometimes I always look to say, make sure you have that reversal candle. Now, a reversal candle is good to have. You're trying to add to that. Sometimes you don't get that perfect trend line, so you're looking for other things that might be lining up. But the 5-minute is very important for me. Now, the cash 5-minute I pay attention to. Now, this being overnight, you're not seeing much go on here. You're not going to see that cash. But we could also look at that 5-minute setup, and let's just do that right now, which I want to do with you right now, live. So here's the 5 minutes, just as I expected. You can see that 5 minute. When we look at the 5 minute, we're looking at our fast stochastic 14.3 oscillator. You know, the settings on that's the 14 period. We're not looking at a triple on the fast. I mean, we're not looking at a triple stochastic setup where we're looking at all three time frames. Whenever we only look at the triple on the 1 minute chart. That's what that is set up for. The 5 minute chart, we just look at that 5 minute fast stochastic, the 14.3, and you can see it's overbought here. So seeing that 5 minute overbought and the triple threat is your high probability setup, combined with that combined with that trend line, that downward trend line, adds to it. That's three. You know, that is an HPS setup, a really nice one after markets. Now, this is a great example to look for during the market also. That is some things that I, sometimes fail to mention during the day. We look at the market under such a microscope that sometimes we miss the bigger picture, and the bigger picture is that 5 minute time frame, and it's also the 60 minute time frame on those bigger trades that you might be looking to take. So let me put this back to the 1 minute, and let's just go back to what happened today and what was an obvious short day. It was an obvious short day. We're going to go back to the cash. And the cash today, and I mentioned this just on the previous video, I sent down a market radar for tomorrow. But this is how we opened up today after yesterday's rally, after the Fed rally. This is a smack around and chop around, and then we got that nice rally. And we opened up, positive today. And, when we opened up positive, this is where we were. We were coiled up on the 5 minute. This is an extremely, it's not an extremely rare thing. But it's one of our HPS setups. It's what we call the coil stochastic channel breakdown. So whenever you have a coil stochastic, you look for the underlying pattern to play out also. So you're looking at, and it could be very tight. It could be either a channel or a wedge. In this case, we're kind of seeing this tight little wedge. It's not anything really defined, but you're feeling the tightness here. You're just feeling like you're kind of extended up here. This is what you're really looking at here. And it gives it a better breakdown once you see this pattern. This gives you a good timing when you get up here. It's usually 3 or 4 rotations up with the higher lows, and then you're going to break down, and that move down is more aggressive. And that was a setup here. So just in the morning, you had this 5 minute setup. The morning gave you this. This was just a big sell signal. Combine that with the 60 minute, which was up here this morning. Well, it was pointing down. Where was it? Right here. So here we are in the 60 minute. So you had that 60 minute sell signal. You had that 5 minute coil. This was a textbook short setup. I did a little thinking today, thinking, hey, all right, we got some follow through today. Maybe we're going to buy that first pullback and we're going to bounce, and it did not do that. And that's thinking too much in this market. So I want to make sure, make a criteria here, and I'm going to do this with you right now because it's such an obvious setup here. When you look at the HPS, the criteria, these different setups, you can see them on the playbooks, the playbook plays on the forum, the HPS playbooks. Each one represents, that HPS type of zone, the coil stochastic channel breakdown, the dual stochastic 60 minute 5 minute setup. We have our divergences. We have the triple threat with the trend line. So we're just waiting for these combinations to line up. When they line up, you have to pay attention to them. You can't go against them. Here you have, these oversold hourlies. Here's your hourly setup, and this really starts to establish this 1, 2, 3 pattern. And we kind of start to see this kind of coil down here, and then a breakout off of here. This was oversold, lower trend line. Once we start to establish these 2 trend lines in this bottom one, we can make a parallel line. And when the price comes down to that, and you're oversold on the 60 and 5. Here's you have the 60, and it's been chopping around for a couple days, on the 60, and that's danger. But we had to wait for everything to line up. This was up here, and we're still waiting for this trend line. So as this chops around, and the price gets down, then you have a combination of multiple things happen. This is what which was a great setup in itself. The reversal 60 minute candle, the lower trend line. At this point, it was probably a 5 minute setup too, and you had a nice bounce. And then, that was the rally and the breakout and the Fed. And now we're back here right now. So, again, a couple things. Just got to drill it in. I got to drill it into myself. This is one way I do it. Coil stochastics, dangerous to the downside. Same thing. Coil stochastic setups to the upside. When we do spot them, they're great trades to have to the upside. The combination of that 60-minute time frame lining up with that is just a go-to sell side trade. And then once that's established, you can walk this trade down by seeing multiple sell signals throughout the day. And until you start to see something change, this is what we're looking at. You could start to see these rotations, the quick rotation back up, we sell off, back up, we sell off. We have better sell signals here versus the buy signals. The only good buy signal back here was this divergence at 12:45. There was a nice little divergence there, and that's important to pay attention to. You know, that divergence is one of our HPS setups. That's a better setup. You know, getting in up here on just a pullback and trying to guess when this thing's going to break back higher. This is what you have to wait for, the divergence. You know, and that was obvious. You know, we could see that set up there. I showed you on the ram in the bush. And from that point on, again, short-term moves. This actually came back down, and then we broke down. And you see this trend line here. This was a good trend line. And when we break down a trend line like that, you know, when we move back up to that trend line, which we did right here, that becomes an important trend line to watch. And again, you have a triple trend line, maybe even a small reversal, and boom, market here reacts right off of that. And you got to tell yourself, you got to think to yourself, you know, there's got to be just algorithms out there that measure these levels off. These pivots are calculated, these lines are plotted, and when the price comes up and you see those lines, these machines take over and you trade with it, and it's almost a self-fulfilling prophecy, you know. And that's where we are right now. We bounce off of that. We come right back down. Now we're starting to chop around. We're coming up to that trend line again. At one point, this will break through. We'll start to see those signals also. It might be a triple stochastic buy signal down here, or a divergence setup. You know, it seems like there's a little bit more volume tonight than normal. It's a little bit more active. But this thing will really start to come together tomorrow, Friday. You know, we'll start to see those patterns play out. Just understand, you know, the importance of making sure that time frame is on your side. Try not to outguess the market. You might have some experience that tells you one thing, and you know, and sometimes you have to go with that. You know, even against it. There is those times when the markets embed itself, strength leading to more strength and weakness leading to more weakness. But the majority of the time, you're going to see these patterns play out over and over again. And when there's no news around it normally will react the way you want it to react. When there's news out there and something out there, really, again, this next 2 days, including yesterday, full of news. So, you know, we're getting a little bit more volatile moves. And that's where we're going to leave it off. So I hope you enjoyed this video, even though I wish I took advantage of this setup today. But I have learned the important lesson to wait for that setup and to see that. Obvious to see that setup was a short setup.